Let's begin with Walmart and some really, really impressive earnings here, Ron. Same-store sales in the U.S. up 4.2%. Groceries and toys, two of the big highlights. E-commerce sales up 43%. I had to really hit the E there because you don't really think of Walmart with e-commerce, and the stock up around 3%. So some happy holidays for Walmart, huh?
Yeah, really, really strong. This is 18 quarters of U.S. comparable sales growth. And if you recall, 5 years ago or so, let's say, all we talked about is how they needed to turn the U.S. business, or this was going to be a company in trouble. And kudos to them for really getting that done 18 quarters later. What a streak. And as you said, the numbers are great. Comp sales of 4.2% is very strong. Strength in grocery sales, online orders, as you mentioned, e-commerce up 43%. Holiday purchases, including toys, were quite strong. They did have a little bit of a benefit from the government shutdown. It caused the government to move up the distribution of food stamps, and that actually had an impact, a small impact, but it did improve sales just a bit here. That wouldn't happen again in the future. But traffic was up a little bit less than 1%. That's not amazing, but it's fine. What's better is that the average shopper's ticket was up 3.3%. So those two things combined to have some nice increase in sales.
That all sounds good. Jason, what's not to like here?
Well, I mean, nothing really. I mean, it depends on what you're looking for in an investment, right? I mean, if you go back 5 years and you look at how Walmart has performed, I mean, on an absolute basis, it's returned you some money, right? On a comparison with the market, it's trailing the market. That's understandable. You throw Amazon into the mix there, and then you can see very clearly, the premium that the market's been willing to assign Amazon because of the move towards e-commerce. But I think when it comes to Walmart, you have to look a little bit beyond the e-commerce part of the market and understand that Amazon still has that little cloud business that I think is a big
I've heard of that.
Is a big tailwind for them, and that is where it really differentiates itself from Walmart. I mean, I really do. I doff of the cap to Walmart for competing because I really think they're doing a wonderful job of participating and competing in this space. But that's the one thing that Amazon has that Walmart doesn't, and I think that's why you would invest in Amazon over Walmart because you've got that cloud business that's operating on about a $30 billion run rate.
Amazon Web Services.
Well, yeah, some of you may have heard of it. And I mean, it's generating 30+% operating margins. So that's where a lot of that profitability comes from. Whereas with Walmart, that is a retail play, and that's operating on a much thinner margin. But again, not taking anything away from Walmart. I mean, what Walmart has been doing has been very admirable, particularly when you look at how quickly e-commerce has reshaped the retail space.
If you're looking for weakness, you could probably point to international here for Walmart. Sales were actually down 2%. If you exclude currency, it looks a little better, up almost 3%. But they've been struggling there. They've sold off their stores in Brazil recently. They merged their UK operations with a rival. They spent $16 billion on Flipkart. Let's see how that goes. I think we're going to see some pressure, at least in the near term, on earnings as a result of that acquisition, but perhaps it will end up, bearing fruit down the road. So international could use some firming, and if they get the U.S. and the international business firing on all cylinders, if you will, at the same time.
I will.
If that happens at the same time, then you'll see the stock, be a little bit less anemic.
Okay, so I want to tie those 2 points together because Jason was mentioning Amazon really kind of being assigned a multiple or premium in part because of Amazon Web Services in the cloud business. I think as you look at Walmart's success, there's no question that there's going to be room for Walmart and Amazon in the near future. The question we have as investors is, can these both be market-beating stocks? If Walmart has struggled to beat the market recently, is that going to change, or ultimately does Amazon keep Walmart from being a market beater?
So I'd actually jump in here and say perhaps the reason why Walmart has not beaten the market over the past 5 years is because they really had to adapt quickly to a space that had changed seemingly overnight. Now, they've made that adjustment, I think, pretty well. And I think one place where Walmart still does really well, especially when you compare it to Amazon as in grocery. Now, Amazon's trying to participate more in that space, obviously, with the Whole Foods acquisition, but I think Walmart still has a leg up when it comes to the grocery space, and I think they'll probably continue to have that because I think their offering resonates with most of the people out there in the country looking for value and convenience. I mean, with Amazon, sure, you're getting value and convenience, but Whole Foods, they're starting to push those prices back up, so they are kind of separating themselves a little bit from maybe the bigger market opportunity. So I would actually venture a guess that Walmart can be a market-beating investment from today because they've adapted so well to the changing space. I think they've set themselves up for success.
I think that's fair. 21 times earnings, 2% dividend yield. I think it does have the potential to beat the market. Compare that to like a Costco who's at 28 times. You're paying a premium for a company like Costco. Walmart a little bit cheaper, and as a result, perhaps can be a market beater.
Okay, well, there you go. Bullish on Walmart, not quite as bullish on Costco. Is that fair?
At the current price,
it always comes back to Costco.
It's a great company. It's a great company, and it will be a great company for the foreseeable future. The stock's not that cheap, though.
And $1.50 hot dog and drink.